This video is a review of fiscal year 2025 first half financial results, period from April 2024 to September 2024. Honda Motor Co. is a Japanese multinational conglomerate known for manufacturing a wide range of products, including automobiles, motorcycles, power equipment, and more. Honda is also recognized for its innovations in engine technology, robotics, and other areas of engineering. Summary. For the cumulative second quarter of the fiscal year ending March 2025, operating profit was 742.6 billion yen, with an operating profit margin of 6.9%. In automobile business operations, due to a decrease in unit sales volume in China, the total group sales volume decreased by 155,000 units. In motorcycle business operations, global sales remained strong, achieving a total of 10 million units for the cumulative second quarter. The operating cash flow after research and development adjustment, which represents the funding for future investments, remained at the same level as the same period last year, at 1,285.1 billion yen. For fiscal year 2025, the consolidated financial forecast remains unchanged at an operating profit of 1,420 billion yen. Profit for the year attributable to owners of the parent has been revised downward by 50 billion yen from the previous forecast to 950 billion yen, due to decreased equity method profit resulting from reduced sales volume in China and decreased profit in Honda's affiliates in Japan. Forecasted dividends are 34 yen for the interim dividend and 68 yen for the annual dividend. Furthermore, repurchases up to 100 billion yen in shares are planned, in addition to the 300 billion yen share buyback resolution made on May 10, 2024. Main market, automobile and motorcycle business. In automobile business operations, there were increases in Japan and the United States, but due to the expansion of the new energy vehicle market in China and intensified price competition, overall sales decreased, falling below the same period last year. In motorcycle business operations, although there was a decrease due to an economic slowdown in Thailand, strong demand in India and an economic recovery in Vietnam led to an overall increase exceeding the same period last year. Income statement. Consolidated financial results for the second quarter of fiscal year 2025. Operating profit increased by 46 billion yen compared to the same period last year, totaling 742.6 billion yen. Equity method investment profit decreased by 87.4 billion yen, resulting in a loss of 20.7 billion yen. The profit for the period attributable to owners of the parent company was 121.6 billion yen lower, at 494.6 billion yen. Net profit progress rate against the annual forecast of 950 billion yen is 52%. However, the forecasted annual profit of 950 billion yen is 14% decrease from last year. Financial forecast. Consolidated financial forecast for fiscal year 2025. Previous forecast for operating profit at 1,420 billion yen was maintained. Furthermore, the current profit for the year attributable to owners of the parent company has been revised downwards by 50 billion yen to 950 billion yen. The foreign exchange rate assumptions are set at 143 yen per US dollar for the second half and 148 yen for the full year. Change in profit before income taxes. The factors contributing to the increase or decrease in profit before income taxes compared to the same period last year. Operating profit increased by 46 billion yen compared to the same period last year. Regarding sales impacts, increased sales volume led to a profit increase, but higher incentives resulted in an overall negative impact of 28 billion yen. Regarding pricing and cost impacts, the effect of setting prices commensurate with improvements in product value led to a positive increase of 268.6 billion yen. Expenses increased due to rising personnel costs and outsourcing costs, resulting in a negative impact of 105.5 billion yen. Research and development expenses increased by 80 billion yen, resulting in a negative impact. The negative impact of exchange rates resulted in a decrease of 9 billion yen. Profit before income taxes decreased by 137.3 billion yen, reflecting decreased sales in China. Losses from equity method, caused by decreased profit in Honda's affiliates in Japan, and foreign exchange rate impacts, due to the appreciation of the yen compared to the previous fiscal year, which resulted in a valuation loss on foreign currency-denominated assets, as well as other factors. Dividends. Regarding dividends, the interim dividend for fiscal year 2025 is set at 34 yen per share. The forecast for the annual dividend remains at 68 yen, unchanged from the previous announcement. Additionally, a resolution was made at board meeting to repurchase company shares up to 100 billion yen. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 1,325 yen as of November 13th, and the US dollar stock price is $26.59 as of November 13th. Current PBR is 0.5 and PER is 6.5. Dividend yield is 5.13%. Compared to the last few years, the current stock price is relatively cheap. The stock price fell after the announcement of a downward forecast revision. Conclusion. Recently, Japanese automakers such as Toyota and Nissan have also been struggling to sell their cars in China due to the increase in Chinese companies' electric vehicle sales. As the shift to electric vehicles continues worldwide, Honda also faces an urgent need to strengthen its electric vehicle sales. However, Honda's motorcycle business is growing steadily. Although the annual forecast has been revised downward, at least the dividend amount will remain the same, and Honda will also repurchase its own shares as shareholder returns.